Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to another edition of the Grain Feed brought to you by Ever.Ag. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago home office on another very cool and rainy May day here in the Midwest. I had the lovely experience of being in Dallas, Texas here this week, where it was much warmer and really starting to wonder. You start to wonder, Brandon Weigel, and we'll get to you in a minute, but what we're doing up here in the great north, but we'll get to that in a minute. Joining me today from Wichita, Kansas, we have the director of Feed Foundations, Mr. Jake Kingsley, and from Wisconsin, grain and feed market advisor, along with some livestock advisor role, Mr. Brandon Weigel. Team, how are we today?
Very well.
Doing well, Jim. How are you?
I'm doing very well. Had a wonderful week with the dairy producer team down in Texas, along with some of our support and partnered units within Ever.Ag, including the feed division led by Mr. Kingsley was down there as well. It's our vault team. We had our insurance ops team. We had everybody down there. It was a great week. Lots of collaboration. Ever.Ag is continuing on the up and up. Brandon, you stayed at the desk. You were here in the Midwest. You were dealing with 40s. You're dealing with rain. You're dealing with some corn markets on the up and up a little bit here. We'll get to that here in a second because Lexi, per usual, we're going to ask you to timestamp the broadcast because it's Thursday morning. It's 10:15 Chicago time. We are recording on Thursday morning. We've been doing some Wednesday afternoons, but we moved it a bit here this week. So it's Thursday morning. Markets are open as we record. Nice change of pace. And we do have the corn market largely flat this morning, although up a nice chunk this week here in Chicago. We have December corn futures, let's say down a penny at 454.5 here at the board. We have July back to holding above 460 at 463 as we record here today. We have July beans up 5 1/4 at 1068, and Novi beans up 1 1/2 at 1053 3/4. And then good old soybean meal, that stubborn little byproduct. It has managed to find a little bit of life over the past few days. And we have July meal trying to make its way back to 300 at 298.50. That's up 440 per ton. And December meal up 420 at 311.40 per ton. And we'll talk about its fellow byproduct a bit today too, which is down a good 80 ticks at the moment across the curve really for bean oils. We've got July back at 49 cents a pound. So something we're going to review here as well. But before we talk about the feed element, Brandon, just real quick, because you're working with folks on the beef side of things a little bit here, servicing some of our dairy farmers with their Beef on Dairy program, which we do here at Ever.Ag on behalf of our dairy farmers. So Brandon, if you could, for a moment, tell us what's happening in the beef markets here as we start wrapping up the end of this week, heading into Memorial Day weekend.
Yeah, lots of exciting stuff in the cattle markets, especially for dairy producers. I think everyone realizes how big of a revenue driver beef on dairy has been for most producers. And as we head into Memorial Day weekend, everybody's turning on the grills, getting things ready to rock and roll on that front. This is kind of the time of year where we seasonally start to see box beef values rally going into grilling season. Now, a lot of seasonality so far in 2025 has been thrown to the wayside simply because fundamentals from the supply side are so out of whack. We continue to have immense concerns around feeder cattle supplies in the U.S., especially after we once again closed down the U.S. Mexico border here. About a week and a half ago, USDA Secretary Rollins said, hey, until we get this new age screwworm concern under wraps, we are no longer importing Mexican feeder cattle. So we import about 100,000 head of feeder cattle a month from Mexico. That's about 3 to 3.5% of U.S. feeder cattle supplies. So You take that out of the equation on top of an already tight domestic feeder cattle supply number, it lends its hand to a lot of concerns around nearby beef supplies. The one thing we have to be cognizant of, we did see the market rally on that news here a week and a half ago, and since then we've started to cool off. Now, I don't think we are yet at the tightest point from a beef supply standpoint, but one of the things we always have to remember, it doesn't matter what market you're talking about. A lot of times bull markets end on bull news. I don't know that, that's the case yet with this thing, but we've now taken this market in the last 6 months and shot it on about a $60 per hundredweight rally. We've seen feeder cattle futures north of $300 per hundredweight, and we continue to see managed money pile into the long side of this thing. So just something to be very cognizant of. Supplies remain very strong. We have to keep an eye on demand. We're finally catching a little bit better news out of the export market, but that has also been up in the air with the China situation. So good news for dairies on this front. Things are on the right track here yet.
Excellent. Very good, Brandon. We appreciate the color on that front because, yeah, as you said, this has been a very helpful additional revenue for dairies that are utilizing some of these higher prices because, holy smokes, I mean, he said the bullish market can end on bullish news. Thus far, it feels like it hasn't ended yet. The trend has not quite reversed yet, but maybe as you suggested, maybe we're stalling out slightly at some of these highs. There have been a couple pullbacks here and there, but for the most part, holy smokes. And then flip it back over to the feed side then, something that also continues to help the dairies, not necessarily on the revenue side like high beef prices does, but on their input side, we've kept feed, largely under pressure really up until the start of this week, Brandon. And as we joke a bit here about our weather as we move into Memorial Day weekend. And as we light those grills, I wish it was maybe like 70s highs instead of 50s and 60s. But all things considered, things have been very good. But then we look at this week, it's been cold and wet. Suddenly, folks, maybe east of the Mississippi that have been on a pretty good planting pace, maybe have to sit this one out here for a bit and let things dry out. I don't think we're complaining too much about getting some rainfall here late May, but again, it forces folks to maybe sit back and wait a little bit. So what else are you hearing on the corn side of things here in the Midwest, Brandon?
Yeah, so far so good. There really hasn't been too many complaints about weather so far, about planting pace as a whole. There's a few areas, as there always are, that are delayed. You've got some areas in southern Illinois. Ohio's been very wet. So there's certainly areas that have had the extreme in terms of rainfall that are further delayed. But on average, as of this last week on Monday, we were about 78% done with corn planting across the U.S., and that's relative to 73% on the 5-year average. Soybeans were at 66% done relative to 53% on the 5-year average. So things are moving along on the right track. To see this rainfall move through a big portion of the Midwest here over the last week now is also a big benefit. There was a lot of areas that were dealing with some crusting concerns, especially like down through eastern Iowa, and you get some relief to those areas. I think it provides a lot of benefit to this crop and probably alleviates a lot of worry about it here nearby.
As we then move into, June, we are still working with the projected planting number of 95 million acres. And I think ultimately, that probably keeps a damper on any super bullish hopes in this market as of the moment. But it's also important to acknowledge, Brandon, I mean, we have moved December futures a solid 15 to 20 cents now, just in the 4-ish days of this trading week. So, I mean, it's not for nothing. We pulled this thing out of the 430 range on our December futures into the 450s. So it's been a pretty healthy shift here. And that's why we emphasize when we do trade on the lows like we have been and retesting those floors, emphasizing the opportunity for our dairies to step in with some hedges while they have it. But let's flip her over to the protein side as well. And maybe, Jake, we can bring you in on this one too, because meal has largely remained under pressure for quite some time. We've kept nearby below 300. December has been flirting with 300 in terms of it's had a tough time breaking down through that level, but now it's popped back up to that 310 range, which has really been the upper end for, let's say, 2 months plus in terms of what that looks like. Jake, before we get into the cash component and what's impacting this on the bean oil side, Brandon, from a futures element here, What are we looking at here for December meal futures? So we start being concerned that we've maybe rallied $10 over 3 or 4 days, or does it seem a bit natural, the support level at the moment?
This definitely seems a bit natural. I mean, really over the last 6 weeks now, shoot, even almost going back 2 months, we've basically just been stuck between $300 and 310. And we're sitting on the top side of that now. I think where you start to maybe draw some concern in is if we break over 310 and we start moving above this recent range. Because typically, if you look back through history, the longer we sit at $300 without being able to break below it, a lot of times the more explosive the move is out of the backside, which is why we've used this last 2 months to be very proactive in not only making physical purchases, but also getting some topside price protection in place. When we talk about this soybean meal picture for this year, soybean acres in the US are going to be about 3.5 million less than they were a year ago. And you've also already priced in a lot of bearish news to this soybean meal complex because Argentina is working through harvest right now. They're about 70% done. Their crop looks like it's been very good, and they are the leading exporter of soybean meal in the world. So you've already got a lot of, bearish news thrown at this thing. The one thing that could continue to keep it compressed and subdued is if we do see some progress made with 45Z. And I know we're going to talk a little bit about that. But as a whole, it just feels like at these levels, downside opportunity is so much more limited than what topside risk is.
Yeah, I agree with you on that front. And you emphasize, Brandon, the historical, charting on December meal. I mean, Dece meal, it just does not like to spend that much time below $300 a ton, really over the past almost, let's say, 10 years, if you start to stretch these charts back a bit. Now, other meal contracts can and will ultimately break down through there. We're looking at July trade in the 290s very consistently lately. So the emphasis on that December meal contract, which really is the new crop target and what we're buying that October, November, December pricing on when we are servicing our dairy and livestock producers on their feed side. But Jake, from what you're seeing from a cash perspective, but also there's been some chatter on really the bean oil side, which has been a very volatile market. It's really tracking that 45Z credit in terms of the, let's say, benefit to a biofuel blender. And we're kind of watching that as this tax bill now in Congress has moved from the House to the Senate. I mean, we have a final hurdle or two in terms of keeping an eye on these biofuel credits. What are your thoughts on this, let's say, soy complex topic lately?
There's been a lot of concern around 45Z for a while and the uncertainty in that because a lot of the language was put together and pushed through by the previous presidential administration in late 2024, but was not finalized and set into law at that point. And we've been waiting on it to be kind of polished up and signed through. And this latest round, effectively, they decided to punt on it a little longer, not make any final decisions. So that adds a little more uncertainty to crush. There's also an assumption that the amount of soybean oil that would be required to go into renewable diesel production and some of that blend could come in at a lower number than was initially anticipated. And so if you have a lower demand for that product and a reconfiguring of some of the incentives and subsidies that come along with that, it's a significant portion of the margin that these soy crush plants are relying on. And so we get some uncertainty and some expectation of reduced profitability from that. And we've seen it now, I think, twice in the last couple of weeks where soy oil really takes a dramatic hit and moves lower on the futures market in a matter of a day or two. And almost immediately, the response from soybean meal is a jump higher of $4, $5, even $8 a ton on the expectation that that lower soy oil value is going to slow down these crushers. I mean, even a dial back to 90 or 85% of capacity would be a significant change for these folks as they've been really stacking up month after month of record crush, at least most of last year and a handful of times this year. So to dial that back even a handful of percent means a lot less meal availability, at least in the immediate market. And also then you see a little bit of a response in the basis portion of price because cash soybean meal has to carry a little bit more of the burden of profit margin at the crush plant when oil falls apart like that. So yeah, I think you guys took a good look at the futures portion of that piece, and we've had attractive opportunities both in futures and basis on a lot of protein, certainly for the rest of the old crop year here through September, but also to get started on a large portion of what we need for the next crop year going October through September of 2026. And just, we don't live down here at or below $300 a ton for very long, very often. And as we're seeing right now, it feels like this market is just looking for a reason to climb higher. It's had all of this bearish information thrown at it, and it still just hangs out at 300. So sure, it could work a little lower if we get a few favorable things checked off and confirmed, but stepping in here now, you're not missing the bottom by much. And then you've got all the time in the world to kind of work around that and try to improve on that price if you feel that you need to do so. We're working there. We've seen some opportunity in corn. I think there's a lot of weather concerns as folks get to the tail end of their planting season across the Midwest. And I say weather concerns, meaning pretty typical stuff. There's a little too much rain in some spots, a little too dry and maybe too warm in some other spots. And it's no longer perfect planting conditions, which is pretty usual most years. I think we're going to probably see some volatility in the futures market there for the next 30 or 45 days. Hopefully, with the big acreage number and the large yield expectation that we've got on the table, these folks get everything in the ground that we're expecting. We will get an opportunity to see both of those values suppressed a little bit as we get through the growing season and moving closer towards harvest, and we can start to capture some really nice cash prices on those. But we've had a lot of opportunity to manage risk there while the market was under a little bit of pressure, and I expect we'll get another opportunity or two. So you got to just be active early. I think a lot of folks have done a good job of that, and now we're into a good old weather market that will probably hang around for another month or so and kind of see how this crop comes together. So
That's exactly right, Jake. And we've got some time. I mean, we keep trying to tell folks, man, it's only May 22nd, right, as when we record today. So there's a lot of time for a lot of volatility this summer. The forecasts currently are not suggesting it at the moment, but we know very well that the summer can throw a lot of curveballs our way as we're trying to buy feed and manage risk against that. So keep that in mind and always continue to listen to your feed and grain market advisors here from Ever.Ag for additional consultation. But in the meantime, folks, let's focus on Memorial Day. Let everybody get to it. I know the cows don't take Monday off, but I'm sure they could help salute everybody and remember why we celebrate and honor this day. And we'd also like to thank Jake and Brandon for being back on the show, gentlemen. Always great to have you, Brandon. Thanks for being there.
Thanks for having me. Glad to be here.
We also want to thank the Ever.Ag Insights crew for their support. We want to thank Lexi for her production magic, and thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.